Today, I want to talk about these levered trades that I don't think people really understand what's going on. So, we're going to go over three of them, all different, but all highly leveraged, all for picking up pennies in front of the steamroller. So, let's just go over quickly the end carry trade, only to say what actually in the end happens, okay? What do we have in our hands? So you're an asset manager, you have $1 billion. You go to Japan, you do the yen carry trade, and by doing the yen carry trade, you borrow out of the JGBs and you bring back a little under $1 billion, right? Because you can't borrow 100%, but you can borrow like 99.9%. So you have $1 billion. So you're an asset manager, you do tech, you do distressed debt, you do private equity, doesn't matter, right? You're a long short fund, doesn't matter. You have a little less than $1 billion in your hands to go do what you want. What do you have in Japan? You have $1 billion in JGBs that you borrowed money against and you're making the spread. So which is what we call a carry. Are you making 10, 20, 30, 40 basis points? It depends on where you put on the trade. So you start with $1 billion and you have basically the $1 billion to go invest wherever you want in the world, but you leave $1 billion borrowed in Japan that you're making 30 or 40 basis points off of. That's really the yen carry trade, okay? Now, there are other trades out there, like the cash basis trade. So the basis trade starts here on the second paragraph, okay? And it exploits the arbitrage between the spread of treasury futures and cash treasuries, okay? So there's futures on our treasuries, and they are richer, all right? Because they're in the future and you have to pay to be in the future, okay? So what they do is they buy the cash and they sell the futures, and there's the difference, okay? And what they say here is that it is trading relatively rich, with asset managers on the other side of the futures who collect the basis of the spread. Conservatively estimate that the basis captures 45 basis points annualized, which hedge funds lever up to at least 20 times in repurchase agreements or prime brokerage, so they get upwards of a 9% annualized return. Here's the problem with that, okay? We know in this exact report that the average hedge fund in America is leveraged up 56 times. So 20, they're getting 9. So these guys are getting like, what, 25% return on doing this, okay? Now they say the trade is not actually risk-free. No trade is risk-free. It is particularly risky when there's a dash for cash and the bases diverge, which infamously, when the pandemic struck the economy, rates were headed lower for longer, so future prices rose, but cash treasuries nonetheless sold off as investors sought cash. So in other words, when there's a dash for cash, this trade blows up. How big is it? As we said before, it's between 1.1 and 1.4 trillion dollars. So there's other trades too. One of them is when the ETFs have, when they rebalance, the question that the hedge funds are playing around with is it going to be overweight or underweight each individual stock inside the ETF? So again, they're guessing which way it goes, and they're just picking up literally hundreds of a basis point, and what they do is they leverage it up a lot. And here's Millennial. Millennial loses $900 million, basically $1 billion. And how did they lose it? They had two teams focused on index rebalancing, a strategy recently upended by global stock market volatility. And so really, where they're just going in, playing with algorithms, trying to guess and pick up a few bucks, when the markets went a little crazy, they basically lose $1 billion. And this article here says, hey, by the way, this trade is very likely impacting other funds as well. Remember something, Wall Street, we copy everything, okay? So really, in the end, with Wall Street, someone invents a new way of doing things, everyone converges, they take all the fat out of the trade, and it gets very skinny, and then the only way to make money off that trade is to use high leverage, right? And we're talking literally 50, 60, 70, 80 times leverage. So here are three trades, okay, that don't do anything for your investment philosophy, right? It has nothing to do with it. All these hedge funds are long, short, tech, whatever they're buying or selling. It doesn't actually matter. They're putting these trades, I call them base trades. No one else does. I call them base trades because they have nothing to do with how the manager is managing the money. Like we think, buying stocks and, selling NVIDIA, whatever you're doing, okay? Doesn't matter. They're saying, hey, look, we can make these basis points using high leverage and still have our money to go out and do what we want. So, 10, 20, 30 basis points in $1 billion, it adds up. And as we know, the Encarry trade is somewhere between 7 and 20 trillion dollars. The basis trade is also about depends, 1.1 to 1.5 trillion dollars. Again, an extremely highly leveraged trade that has nothing to do with what the asset manager is doing other than picking up a little extra yield, right? Because it's a highly competitive industry. And then when you're arbitraging the ETF rebalancing, on the quarter, that's insane. But again, they leverage themselves way up, and then they can make whatever they're making. They don't say, right, what they're making off of this arbitrage trade. But obviously, you can also lose $1 billion. So, what do you think? The first question I want to know is, should these funds be able to do this? Should you be able to put on these base trades that are just based in high leverage, right, to pick up pennies in front of the steamroller until you get steamrolled? And if they get steamrolled, guess who gets steamrolled? We get steamrolled, okay? So there's only three. I'm sure there's many more. These people, as I say, they're ants with brains. So what do you think? Should we allow this? If not, do you think this is okay? And do we control this by just saying you can't lever up more than 5, 10 times, 4 times? I don't know. What do you think? Like and follow, and certainly tell me in the comments.